Well, hello guys. How have you been? I hope you have been good. Here I am from our Team Academy channel, and this is the first live webinar of this channel. So today we want to talk a little bit about the RTM. And I think we waited enough, but 65% joined to the webinar. Well, we're going to start. Okay, please let me. Okay, well, guys, we assume that you are joined to this webinar. At least you know something about the technical analysis and RTM, but at first we start with a brief definition of RTM here. So, as we know, the RTM is a abbreviation of a rhythm market. Let me write it down right here. RTM, sorry, read the market. We put it there. Yeah. In this method of technical analysis, we usually use the price of the viewpoint of the banks and big boys and big institutes. And, we believe that the price always looking for the liquidity. So, but in this method of trading in RTM, we have two major types of rhythm market analysis. Let me write it down here. The first one is the first one is analytical and based on setups. So in RTM we have two major types. The first one is analytical and the second one is based on setups. Well, what is analytical and based on setups? In analytical RTM, we looking for the orders, and in other words, we track orders in order to find a place which has a high liquidity zone, and we put our order on that zone. But an analytical way of trading in RTM is really, really hard, because you will face with lots of contradictions, and you should identify the reason of all high and lows and the price movement and these sort of things. So you will face with lots of problem in it. As I remember, anyone who put their steps in the analytical RTM, they face with lots of problem in future, and most of them leave the trading away, put the trading away, and the most of them and the rest of them, change their way of trading. But we have another types of RTM, which is named based on setups. As you see in the PDFs and the contents shared by Mansoor Sapari and Hanzo and Noura and these guys, they are not tracking orders in the market, and they just look the market with a setup. But both ways, each one has a pros and has their pros and cons. So In an analytical way, I told you it is really hard. At least it takes, for example, 5 or 6 years in order to get profit, make a profit with this way of trading. But in the base setups, the win rate is low, and mostly the market, at most of the time, market never creates a beautiful setup for you. For example, in the PDFs created by Mansoor Sapari and his students, you see that they tell you that this is a QM. High, low, higher high, and lower low, and price get back to the QM level, and then we can short here. But it is this kind of QM, beautiful QM, is really rare. Most of the time, the QM that you see in the market is something like this: high, low, and higher high, and lower low, and this is still a QM. But the way that you identify this one as a QM is really hard. That you and that needs a lots of practice. But the way that we trading is something like if-minus. We combine the analytical and based on setups together. We solve the contradictions of the analytical, but with the setups. Let me give you some examples in a chart that I want to tell you. In this way, we never make a touch trade. At first, we we identify the FL, our flag limit, and after that, we wait for rejection, and after the rejection, we continue by the setups. So let me draw a schematic right here for you. And what is the flag and flag limit, and brief expression about the QM. QM is one of the most important things in the RTM. So we have a high, low, higher high, and lower low. But sometimes you will see that here we have plenty of highs, and you don't know which one is a high of this QM. Well, the main characteristic of this high and low is that this high and low should be a true high and low. What is a true high and low? True high and low is a flag limit. So what is flag limit? In this webinar, I just want to show you really brief and quick tricks about the finding the true high and lows for the QM. As we know about the flags and flags limit, here we have a base right here. After that, we have a sharp move, or we have a move up. We call it pole. And then we have a knot here. We have a knot here. And after that, this knot holds the price up. Then price here hits the target and came back here, right here. And after that, price get back to the QM level. So as we see that here, we have an area which holds the price up and took the price to the target. So, and the second area here consumes the previous area's order. So the orders has been transmitted to the second area. So when price engulfs here, what mean engulfs? Engulfs means that price completely consumes the order, eliminate all the orders here. When price engulfs this area, it should get back to the QM level right here. So this is one of the ways in order to find a true high and lows, in order that I told you in a previous video in the channel about the scale. And I told you this high and low should be a true high and low. It's one of the way in order to identify it. So we have here we have a flag limit, and this is the flag. So let's have some examples in the chart in order to what is when I told you about the true high and low. So here we have an area which holds the price up. You see, it holds the price up. And after that, we have this area, and the orders has been transmitted to this area. So if we see, let me, yeah, the second time when price passed this low, if price engulfs this low, it should came back to the QM level with the above line, and you see that here price engulfs this low and got back to the QM level. And but this kind of QM level is not a thing that you can identify with a with a schematic setups. You see high, low, higher, high, and then here lower, low. It is really hard to identify. You can just identify them by the analytical way. But when you combine the analytical way and the setups together, you can realize something new in the market. So, and on the other hand, the things that we should focus on it is the compressions. What is the compressions? Let me draw a brief schematic here for you. Compressions is a thing in the market that we see that the orders is transferred to the another level. You see that here we have an area, for example, it holds the price up. I know it is a really, really, really simple schematic that I drawing to you. It is not sophisticated because it has a lots of details and these sort of things. But we have an area here, and this area holds the price up, and the orders has been transmitted to this area, to the new area here. And when the price comes and consumes the orders right here, it moves up, and you see the orders has been transmitted to the new area. And when price moves up and again it gets back to the previous area, it rejected again, and the orders transmitted to new area. So, but the next time, if price engulf this low, it guaranteed to reach the first area. So if price engulfs this low, it get back to the QM level, and after that, price price falls dramatically because we call it CP here. So CP is a thing that the orders transfer to the next leg. So, and we see here, let me move to lower time frame right here. Yeah, we see here we have a CP. At the first, this area, let me draw it. You see this area, sorry. So, see this area, it holds the price up. And after that, this area moves up and consumes the orders from the first one. And after that, you see here, and you see same like that here. And the orders transmitted, in the high. And you see that if we consider here as a pole, this is a pole right here, this is a pole, and this is a flag limit. So you see the orders is transmitted to the upward, and this area is the QM level that I told you the price should get back to it. So if you move forward, you see here holds the price down, but no, we couldn't say that it holds the price down because it didn't pass this low. But if you see right here, let me move to lower time frame. Yeah, here we have an area which is holds the price down. Let me move to one step lower time frame. Yeah, it's here. You see here, it holds the price up, And here again, it holds the price up. And this is the last area. You see, it took the price to the target, to the last high. So the last area, the last remained area is a true high and low. And it's a place that we can draw a QM level on it. So it is high, low, higher, high, and lower, low. So what is the left shoulder king? You see that left shoulder king is here, but price didn't reach to it. Yeah, because the orders has been transmitted to here, and after that to here. You see, and the last area is here. The orders, transmitted to the lows, and you see, it was the final area that price rejected from. So, and you see now the orders transmitted to this big area. But this area is too big, and it is useless for us. We need to make it a little bit smaller. So we see, let me the common area of this big area and this small is a really good area. I know in the analytical RTM they call it DP. They call this one DP, but DP is nothing else except a simple QM level or flag limit, lower time frame flag limit. DP is a thing that is one of the most contradictions that every RTM trader struggle with it. But DP is a really simple thing, like a QM level and these sort of things. And you see here, we have a maximum pain level right here. This is the maximum pain level, and you see this here price didn't reach to it. And if we move to higher time frame, yeah, you see here after a while price get back to it. And but let me tell you something really, really important for you right here, because this is the difference between the way we trading and the typical RTM. We know that here is a last area which is remains, and price didn't took it. So the price is same like a chain links. The price is the same like a chain links. And if one link get broken, in the future price comes and connect that link together again. Never forget that the price is same like chain links. And you see that the one link broken here, and after a while price comes and make a rejection from this level. So but trading, have a trade in this area is really risky. Why? Because price comes from this low and the area that I marked for you, and you see that price get back to the area really late. After lots of swings and highs and lows, price get back to the area. So it is really high risk to make a trade here. So what should we do? We should wait for rejection. At first, we should wait for rejection, and when we see here we have a rejection, we have a strong rejection, we realize that the area that we marked here is true. All the contradictions resolved by this attitude. So we wait for rejection, and when we see the price rejected here, okay, we're looking for a QM level. This is the true QM level that we should looking for. You got it? This is a true QM level. So let me see what else we have here. Exactly. Yeah, true QM level, and this is the left shoulder king right here. Sorry. and we see it holds the price down 2 times. I explained to you why it holds the price down 2 times in the video about the scale. I'm not going to mention it here again, but what do we have here? Let me use the concept of true high and low here again that I told you, and we could find the true level right here. You see that here we have a pole, here we have a pole, we have a strong movement right here. And after that, price makes nut for us, and this nut holds the price up, and you see the orders transform to this area, and after that transform to this area. You see, and after that transform to this area. This is the last area remains, and you see here it creates a beautiful QM level for you. So now the orders transmitted to this area. This is the way that we find the targets, guys. The orders transmitted to this area, and you see when it proved, it get back to this area again. And the orders now is in this area. So let's see what happens in the future. You see, it holds the price down again. Yeah, it holds the price down again. So beautiful. And let me see what happened here again. I see something else. As I told you in the previous example here, if you miss the trade here, no worries, you can trade right here with another QM level, you see. And what is this key? How do I find this QM level? Yeah, it's the way that I told you, we have a pole right here. This is a pole, okay? And you see here we have a flag limit, which is holds the price up. And after that, the orders has been transmitted to the new area. Then the orders again transmitted to this area. And finally, this area is the last true high and low, is the last area. It is CP, yeah, it's CP. When the price engulfs this low, it should get back to the QM level. And you see it get back to the QM level. And it holds the price down, and you can have a beautiful trade right over here with a really logical risk reward. You can enter right here. Sorry, I don't know why this is not working. Yeah, we can enter right here. We put your stop loss right above this high, and your first target is right down the compression, end of the compression, and you can make a risk-free, and you can get a really good reward from it, and the risk is really low here. Well, let's move and see what else we've got here. Well, and another one you can find here easily. You see here we have a pole, and we have a flag limit, and this flag limit took the price to the target, and the orders transmitted to this one. And if we draw a left shoulder king, you see that here is a left shoulder king, so it holds the price down. But it's not beautifully used that, but it's okay. Well, let's move to higher time frame and see what else we have got here. Oh, sorry, I forgot this one. Yeah, the main rejection is here. I didn't know that. Yeah, the main rejection is occurred here. The things that I told you, the price, the price is same like a chain links, that every piece of price is like a chain link connected to each other. If anywhere gets broken in this chain link, in the future price comes and connect the links again together. You see, yeah, here didn't consume this area and the price get back to it. So after that, easily we can see another example right here. We have a pole, strong movement here, and after that we have a flag. So this flag took the price to the target, and if we consider it as a QM level, you would see that the orders now is in this area. So let me delete this one. Is in this area, and you see that when the price engulfs this low, it got back to this area, and price made the beautiful rejection right here. And if we dig into this area, we can find a really tight place and find the exact place. But we just want to make a profit. We don't want to make a really unbelievable risk reward and these sort of things. 1 to 4, 1 to 3, or 1 to 5 is enough for us. But you can make a trade, for example, 1 to more than 20. But it is so risky. It is really risky to do these sort of things. Well, and I told you here as a true area, here we have a QM again, and you see this area is full of orders, and you see the price. It holds the price down again. So and after a while it gets back to this area again, and you can move to lower time frame and see the QM levels right here, because the price reached to that area so late, and you can find out. But here is a little bit confusing place. But yeah, here we can consider here as a QM level, and this is left shoulder king, and right into this left shoulder king we can find another left shoulder king right here, and you see here is a place that we can have a trade on it. Why? Because trade in this area is so risky. The price get back to this area so late, and we don't know where price coming from. It is really easy. We use the pros of the space RTM based on setups, and the pros of the analytical RTM. Both of them together. So let's move to another. Okay, let me delete. Okay, sorry, let me delete this one for you. Yeah. And explain the things here that I'll let this one remain. So here we have an area. This low took the price to this high. So here is an important area that we have. And you see here, price reached it a little bit, but I want to dig into here and see what happened in this area. So the Dukascopy data is not good enough. It has lots of mistakes and these sort of things, but it's okay. Well, guys, you see here we have a pole. We have a pole here, and this area holds the price up. And after that, this area consumes the orders, and the orders transmitted to the higher area. And after that, this area consumes the previous area too. And the last area is right here. This is the last area right here. So let's move to lower time frame and see what happens there. Yeah, this is the last area. And you see, if you draw a left shoulder kink from here, you can find this area. Yeah, you can find this area. And, you see this leg consumes the orders. And this area is a place which has a lots of orders right here. And let's move to higher time frame and see what happens here. Yeah, and you see price rejected, but let me see, this area is rejected. Yeah, okay, anyway, we know that now the orders is in this area. Why I told you that the order is in this area? Because this low took the price to the target, and here is a target. So when this low took the price to the target, it means that here we had loads of orders right here, and after that, when it reached to the target, here we have an area. How can I tell you? We have an area in which the sellers could overcome to the buyers. So with this simple conclusion, we can find out that this area is full of the orders, but the way that we find this area is with the setups. We find this area, but we analyze what we traded in an analytical way. So we have an area, and after that we have a price approach. Okay, wait a little bit. Okay, 19 question and answers. Well, okay, wait, guys. At the end of the webinar, we have a question and answer. Yeah, but I see something here, Chinese. Yeah, but I couldn't understand this. I just understand the English. Please wrote your questions in English. At the end of the webinar, I'm going to answer them. If I know them, I go to answer them. So, well, here we see that price. Okay. I want to tell you something like this. You see that from here, the orders start to consuming from up to here. See that up to here. It is CP, because all the orders is going to be consumed in this part of the chart. And you see when price pass this high, something like this. Let me delete it. Yeah, when price pass this high, it means that all the orders, up to all the orders in here is eliminated. And you see, in the analytical RTM, they call it DP. They call it decision point. But you cannot bother yourself, because this area here, this is a true high and low because it is a FL. And as I told you, the FL has a QM level. This is that kind of QMs that you couldn't find with the setup. And if you want to find it, yeah, this is the left shoulder kink, and QM. This is a QM. You see, but if you want to trade with the, for example, Mansour, Sapari, and Hanzo, and these sort of things, you couldn't find these kind of QMs at all. Well, anyway, here we have a true area, and you see the price rejected to it, and the last remained area is here. Easier. And I remember that also here we have a maximum pain level and these sort of things. Right here, don't remember because I'm mostly on the pound. So we move to 1 minute time frame, and you see after a while when price reaches that area, yeah, you can easily trade on the QM. You know, if you want to trade, if you want to trade in that area, you know, you should enter here and put your stop loss right above this high, and you see your stop loss is really high, and sorry, it couldn't calculate it. So you but you know, if you do it with the setups, let me show you. You can enter here, right here in this QM level, and put your stop loss right above this high, and you see that your stop loss is really more small than the first one. Okay, we have a area and we wait for the PA. What is the PA? PA is a price approach. We wait for the price approach. If price rejected from the area that we found, we're looking for the setups. Then we're looking for the setups, and we trade with the setups easily. And you know, it is our risk reward is it gets better, and on the other hand, our win rate would be improved. Well, that's it. Okay, guys. The next thing that I'm going to tell you is something about the related about the analytical and based on setups. I'm going to describe the difference between these two ways of trading a little bit in academic language. Well, you know, as you know, guys, we are the traders. You know, we are you know, in addition that we are a trader, we are a researcher too. You know, we are a person who make a research in the market in order to find a way that find a you know, way in order to get a profit. So I can tell you that we are a researcher in the market. So what is the research come from? I want to tell you know, want to tell you the differences between the principle and the hypothesis and the theory in the market. So what is the difference between these? Well, principles is the things that they are always true. For example, Earth has gravity. It's always true. For example, the Earth rotates around the sun. It's the principle. It's always true. Everywhere is true. But what is the theory? Theory comes from a hypothesis, and the hypothesis come from a question. A question. For example, we have a question about the value of A. This is our question. Okay, this is the value of A. I don't know what is the value of A. A is a variable. So we have a hypothesis. This is null hypothesis. We can say that the A is equal 0, or we have an alternative hypothesis that we can say that A is you know, opposite of 0. So we're going to test the hypothesis. We're going to test our hypothesis, and after the testing with the logical methodology, we find out that the A is equal to 0. So here we have a theory. We have a theory that we say that the A is equal to 0. But maybe another researcher came and with a different methodology answered this question, and it find out that the A is not equal to 0. A is anything except 0. You know, this is a theory. Theory could be, you know, theory is not always true. The things that we see in the market is all theory. They are not principle. They are not always true. Okay, that's why we wait for the you know, price approach. That's why we wait for the reaction, and that's why we consider the risk and these sort of things, because we know that theory is not always true. So in the market, we have two major questions. Two major questions in the market we have. The first question is that how price moves, or what is the reason for price movement? So this is the first question that we have in the market. How price moves, or what is the reason of price movement? The things that we know that is that the price, and this question is have been answered in the articles and research, that we know that the price is moves by supply and demand. And what moves the supply and demand, what changes the supply and demand is scarcity. A scarcity of a good makes the, runs the supply and demand. And a scarcity is determines the price. So anyway, but this one is answered. The second question is that what is the next move of price? What is the next move of price? It is a thing that analytical RTM looking for it. It is the question which is analytical RTM is going to find it out. What is the next move? Okay, we want to make a profit. If we want to make a profit, we don't we don't need to find out what is the next move of the price. You see, it is really hard to understand, because you should identify the reason of all these highs and lows and all these valley and peaks, and it could be really exhausting. But the question that we're going to answer it is that when we can identify or predict, not predict, I can identify it's better, predict the next move. Sorry. This is a question that we're going to answer it. We just need to identify the next move, not all the moves. We wait for a situation in order to, we have a, sorry, maybe I have a predict. This has a, sorry, I made a mistake because I'm not native, it is usual, I have this kind of mistakes, sorry. Well, the third question is a question that we're going to answer it. When we can identify or predict the next move, we just want to know the next move. If you want to make a profit, you should wait for a situation in order to that you can find the next move, just next move, and nothing else matters. So this is a difference between the way that we going to trade and the analytical trading. So as last part of my speech, because before the question and answer, one of the guys, his name's Gast here, who wanna have a brief lecture here, but I just wanna show you the topics about the, sorry, let me have a new share here. Yeah, I just want to talk about the topics in RTM. And okay, yeah. After that, I'm going to tell you something about the backtest and training and these sort of things. And the final step, some of our students that they've been taught by us. They want to have a lecture for you, and they are really good in their job, and they are really good traders. And so this is the RTM mentorship that we're going to have in the future. So the first section of the mentorship is that about the structure. In here, we talk about the supply and demand zone and the important candle patterns. These important candle patterns is just for those who don't know, who don't have any background about the technical analysis on RTM. So, and in the future, we dig into the candles and we find out what going on there, Well, and after that is support and resistance, flag and pole that I told you something briefly today, failure to return, FDR, flag limits. The flag limits that we're telling you here is a really simple one, and the flag limits has a several types, but we just telling you the tradable flag limits, not all the flag limits, just tradable. We need the tradable flag limits, and after that the engulf, the compression that I told you, but with really more details. With more details we're going to tell you in the mentorship. And the last part of the first sector is the fake out, FO. So, but the one of the most important, what the next step is really, really important. The first one is the left shoulder kink. These are the setups and approaches. The first one is left shoulder kink, Quasimodo, from beginning up to mastery level. Quasimodo is not a thing that you see just high and low and higher, high and low, low. Quasimodo has a different types, and Quasimodo is totally related to the scale. Is a thing that we can find out how the markets work. It's really important. It's not just a high and low. Believe me. So the third one is ignored QM, the CanCan, Diamond, SRFL, PCP, ECP, and free order flow is really important. And most of them are in the directly and non-directly related to the Quasimodo again. So this one is really important, and I can tell you we worked really hard on this QM, and we find something really, really interesting for you about this one. So the last sector of the mentorship is PA, means price approach, that I told you a little, explained to you a little bit today. The next step is a price action zone pause. It's really important because price action zone is a thing that you can find out the scale with it. The third is a scale and time frame, and the fourth is a price action reading, psychology, and money management. And after all, we have a trade management. So what is the trade management, and how do we, let me show you the notion here. We provide something in Notion for you that when you have a back test here, you should record all your back tests right here, your risk, your ratio, and the result. So for example, you have let me write it down here for you. I have a trade in a pound, and which session, for example, in London, and our direction was long, and we made for example, one person risk here, and we win the trade. And what was the setup? The setup was the FOF. So and what was the ratio? The ratio was, for example, 4. And you see that here, and after that you can have a new one, and you should record all of your backtest right here. And after that, by 20, let me show you something here in Notion. For example, something like this. Sorry, let me share it to you. Yeah, something like this. You see, you should have a 20 backtests. Your backtest should be in a 20 20 20 boxes. So it's 120, 220, and 320. And after that, and let me put Notion. And after that, when you did this, you come here and record your win rate from each of 20 backtest. And you see, for example, 7-1 is here. How many wins that you have if of that 20 part? For example, we have a 15 wins and we have a 5 losses, and from the 20 total, from the 20 trades, we have a 75% win rate. And after all, let me share this Excel for you. And after all, you should record your backtest results and win rate right here. You see that don't scare about the low win rate if you if you persist on your trading way and backtest a little bit, and you see that after, for example, you start with a 35% win rate. After the 200 backtest, you will gain you will have a 45% win rate, and after, for example, 400, it gets 50%, and after, for example, and after about 2000 backtests, you need to have a lot of backtests. It's the key point of the being a good trader. After, for example, 2000 backtests and 1000 and half backtests, you see that the win rate graph, it's going to be upward. And when your average of all of your trades, gets above the 64%, and at least you should have 1000 backtests. At least you should have 1000 backtests. When your win rate, average your win rate gets more than 60%, you are allowed to join the market. You are allowed to have a live account with a little amount of money, and this is the way that you should do in order to be a trader. So some of the guys who wanna please raise the hand in order to make you the guys that they wanna have a lecture. Please raise the hand. Let me see. Okay, let me find him. Gast. Okay, dear Gast, please raise your hand. Okay. Okay, can you hear me, dear Gast?
Hello, hello everyone, can you hear me?
Yeah, it's okay. Okay, let me stop share right here. Could you share your screen, or you don't have access?
Well, I was thinking to only speak for this part.
Okay, okay. Could you share your screen now? Yeah, here you are.
hear me?
Yeah, we have your screen.
Okay, great. So hello everyone, my name is Ghost, and I just wanted to say a couple of things about Mr. Fee and the RTM study. Just a quick note before we continue, I'm using a voice modulator to protect my privacy, so just to let you know. So really, I just wanted to give you guys here a couple of things that I think are important for everybody's trading journey. And first is consistency and simplicity. I think if you want really to become a trader, no matter what your current situation is, if you're a student or you're working, you need to spend every day at least 1 hour to trade or look at charts, everything that's related to trading. And another thing is you need to focus on only one pair. I think this is crucial because after you spend 3-4 weeks consistently with that pair that you choose, you will start to see how price moves and start to get accustomed to the movement of the pair. And like Mr. Fee throughout the whole webinar showed you how orders are transferred from one place to another. If you keep track of multiple pairs, it is not possible to track everything. So I would advise everyone to focus on one pair when starting off and focus only on one pair. Another thing I wanted to touch upon is the market reality and what your mental should be. So I just want to emphasize on how brutal and ruthless the market is. And everybody here in this webinar needs to understand that trading is a zero-sum game. So in order for somebody to win, somebody else has to lose. So we need to be very, very good in what we do. Follow the setups, follow the analytical way or the setups if you want. And you need to be very disciplined. What else? So you just need to start treating the market with the same treatment that it's giving you because it doesn't care about your wins or your losses. So you have to treat it back with the same way, with discipline and not overtrade, focus on the setups and your risk rewards. Backtest is very important. You need to keep track of what your mistakes are. You need to look and journal your trades so you can improve your system. Obviously, when you're trading, it's not always 100% win rate, even if you follow all the rules, right? Sometimes it's just the market has another idea, right? And you just don't see it. So you need to keep a stop loss always. And last thing I want to close, I want to give my testament here that if you're really serious about becoming a full-time trader, you need to really work on your dream. And of course, I believe Mr. Fee here is a great mentor. He's helped me. I can say with confidence that Mr. Fee has brought me closer to achieving my dream as a trader. But at the end, everybody of you needs to put in the work, and you have to realize that all a mentor can do is show you the way. But if you don't walk, you're wasting your time pretty much. So you need to put in the work. And with that being said, I would like to thank you all for listening, and I would give the floor to Mr. Fee again.
Thank you, Mr. Ghost. Our friends changed his voice because of privacy, and we respect to him. So, thank you, dear. Well, the next person is Willie. Dear Willie. I'm asking him to unmute.
Hello, Mr. Bio.
Hello, dear. Here you are.
You're good? Yes. How are you? And how's everyone?
Thanks.
All right. I don't have a PC at the moment, but may you kindly share your screen on Nasdaq. I want to share a trade that I took with some of my group members last week. It's based on free order flow.
Okay, sorry, the
Yes.
share screen.
Can you
Yeah.
share your screen?
I'm
actually
my
using my
screen.
phone, so
Okay. Share my
yes. Share your screen, open Nasdaq on daily chart.
Okay,
Let me just
I'm going to
show people how a glimpse of free order flow, because I believe I personally I do not trade by setup. I focus mainly on free order flow. I feel it's
okay.
safe and is high risk reward.
What is the symbol of the Nasdaq? You know, I haven't traded anymore. So
it's US 100. You can try US 100. Yes.
US 100. So let me find the US 500. Here we have US. In JForex, maybe I don't have
if you can't find
trading view ones.
US 100, try NAS 100.
NAS 100. NAS no, there's no. I have it in my trading view. Let me open up the trading view. I think it could be better.
Cool.
Yeah.
All right.
The JForex is a little bit different. You couldn't share your screen at all.
I'm using my phone. Let me just try.
Okay.
Let me see.
Find
that at least maybe.
Yeah, NAS 100 US. Okay, let me have a new share. Yeah. Which time frame do you want?
Okay, we can start from H4 time frame.
H4 time frame, okay.
Yes.
Let me remove the drawings. Is it okay?
Yeah, perfect.
Okay, here we are.
All right, just give me a few seconds. All right, kindly zoom at this area. Can I put
you can annotate here. Wait a little bit because I should. Yeah, you can annotate everywhere that you want.
Okay. All right. Perfect. It seems I'm only limited to 2 things, yeah, but I'll try and use those. Okay. Kindly zoom into that area. Kindly zoom into that area.
Yeah. Is it good?
Yeah, perfect. Nice. All right. So this is the trade we took last week. I think it was on Thursday. So these are some of the things that I was looking at when I was giving out this to my team members. Okay, if we look at this zone, yeah,
Yeah. Do you wanna I
Then
move to lower
exactly.
time frame?
No, it's okay. It's okay on a higher time frame. May you kindly put a rectangle on that area, the new area that
Okay,
was
okay,
formed.
put a rectangle right here, you mean?
Exactly, right there. That's the area we took a trade on. It was a
Mhm.
sell. Then we can move to lower
Okay.
time frame, maybe H1. Yeah.
Yeah. I'm going to. Yeah.
All right. May you kindly. All right. So
Yeah, we have a QM.
coming from what is it called? A free order flow perspective. So the first thing we look for is a flag limit, right?
Yeah.
And we can see from this point, we've got a significant level there, which got broken, right? So that to us is a first indication that the next or the flag that was produced was actually has orders, because it shows that it broke a significant level. So after breaking off a significant level, may we kindly go to, change to maybe, let's see, M15 time frame, so that we really annotate what's inside this box, so that we show the people what the trade we took.
Yeah, here we are. Is it good?
Yeah, it's good.
Okay.
All right. So the first thing that you guys will realize is that price, in order for you to take any trade, it first of all has to hit its target, right? As long as the target has not yet been hit, there is no need to look for any trades. So that's the first rule. Make sure that price is coming from its target. Once price has hit its target, you can then look for a reaction. That reaction can be a QM. Most of the time, that's what we trade. Okay, let's look at this zone here. You see there's a drop, base drop there, and it got confirmed exactly just like that. That zone, orders have been taken. So we cannot trade that zone, okay, because the orders have been taken. We now look for orders just below that zone. Now we start marking the free orders within that rectangle, the big one that's at the bottom. So the first thing we did was to confirm price has hit its target, and already we can see price hit its target. So there's no need for us to continue asking ourselves if that zone has orders or not. The orders have been taken. Now we go, maybe what I can do, let's see. Can I share my screen, Mr. Pai?
Yeah.
Is it possible?
Here we are. Yeah, it's possible. Let me stop my sharing. Yeah,
all
here
right.
you are.
I want to show you the flashcard and the trade we
you
took.
can share your screen.
No problem. Right. Perfect. So this is the trade I was telling you about. This was now an M5, right? First, we have a confirmed target that was hit, right? Here we've got a set of orders. Okay. I'm not sure if people can see. There's a red box, the first red box thing. There were orders there. The orders got transferred to the further right, which is the blue flag limit. Now, so basically what it means is on the red flag limit, we're looking for sell orders, or we're only looking for sell opportunity. If we transition, or once that flag limit got engulfed, so the engulf and deepest retrace gives us a new flag limit. So now the blue flag limit is representing buy order. So here we're looking for a buy. Those orders got transferred as well, and we got these ones, which were sell orders. And inside those sell orders,
Yeah.
that's where we had what? That's where we had our first target hit. As you can see here, we've got our MPL inside that flag limit. That was the target that was hit. So that was the target that was hit, Mr. Pi, when you highlighted that area on M15 chart. Right. So now we're looking to take a new trade. So first we said a target must be hit. That's the first. The second one, now we look for a reaction, which will be a continuation, or I wouldn't call it a trend continuation, but that's the continuation that we'll be looking for. We look at this zone. This zone is a significant level. Price broke out of that level. If you can see, you see where the blue line is? That's a significant zone because there are two equal highs there. It means they are bound to be what? To be broken. So we had a fake out thing. Touch the flag limit above. After that, we had a transition of orders. So these are the blue flag limit there. Shows us the area where orders were transferred from sell orders to buy orders. And those orders got engulfed again. So this was the projection. We're expecting price to break that zone and to come back there. Right. This was the process that's the orders, or that's the trade that we took. And it sure did hit its target. But this thing dropped about 300 pips, you know. So it's a very basic setup. Let me just share free order for those who don't know what free order flow is. Let me just annotate. Right.
Okay. Dear Willie, your presentation is done. Yeah.
Not yet. I just want to
Not
share
yet.
on free
You
order
want
flow.
me
Then I'm
to
done.
share? Okay, the Nasdaq you want?
No.
No.
Just a whiteboard. I think. Let me just open a whiteboard.
Open a whiteboard. Okay. Here you are. Let me. Okay, let me share my screen. You open it by yourself. Okay.
Yes. Right. So I'm just gonna share on. Let's do this. We've got price moving in this direction. Okay, guys, don't mind the perfection part. Just focus on what's happening.
Oh, Mr. Willie, we don't see anything in your whiteboard.
For real?
Okay, because I know Mr. Alif is waiting after you. He wanna have his lecture. Okay.
All right, no problem. So maybe some other time I'll share on how to identify free order flow next time when there will be a next.
I didn't find the free order flow is something not easy that much, but everyone wanna see. Sorry. Everyone wanna see. Yeah. We can see Willie. Yeah. Okay. Go on, Willie.
Can you see my screen now? Let's see.
Yeah.
Whiteboard.
I'm totally seeing here.
Okay. Is it? Let's see. Can people see my screen right now?
Yeah. It's obvious.
Okay, cool. All right. So we've got that zone over there. A pen. I think a pen is easier to use. Let me just. Okay, we've got a law. Okay, this is a law. That law got engulfed, right? Then we have something like this. I'm trying to expand this thing, but then it keeps giving me what I don't want it to do. All right. Okay, so we call this a flag limit, right? Right. We've got a law. In fact, this is an FTR. It's not a flag limit yet. So we've got a break of a law. Okay, this is a law. It got broken, price deepest retraced, and came
So
back.
really sorry, I'm breaking your speech. You know, we couldn't see anything. I think something is going wrong here. Could you please draw
Alright.
the schematics in a photo, and we're going to share it in the channel? Because I think that people wanna know what you drawing, and could you please draw your schematic in a photo, including you or somewhere else, and take a screenshot, and we will put it in a channel in this video. So the next one is Mr. Alif. Okay, Mr. Alif, here you are. I'm asking you to unmute.
You hear me?
Okay, Mr. Alif.
Everything okay? Yeah. You hear me? Yeah.
Yeah, I'm hearing you, but your voice is a little.
Yeah, I know. I was very excited to participate in this meeting, and so I had to participate from the coffee shop. So I tried to.
We have lots of background noises, you know, around you. Could you please go to the somewhere
now?
quiet? It gets better. It gets better.
Is it better now?
Yeah, it's better. But could you please mute television? And you know, there's it's
Yeah.
get better. Yeah, it's really good.
It's too noisy. I need to mute myself because it's busy here. So I just want to say that I am new here, but I have worked more than 2,000 hours. But with few
really great.
videos on this group, I could get, polish my idea about the flag limits, deep retrace, DP, swap, everything. So, and of course, with the scale topic, I am really looking forward to get more information on the scale, and of course the QM that you said, because I have always thought that the QM is a very simple one, and I couldn't manage that in a real business. But hopefully you open a new topic for us in a new view of the QM. So as a new student in the group, I am super excited, and I'm really looking forward to get more and more on the QM topic, on the DP, and of course topic and scale. Sorry for the background noise, and
Okay.
I believe I need to mute myself, otherwise I would offend all the people there.
Okay, thank you
Thank you very much.
Alif. Okay, we got so excited about this. Yeah, the QM is one of the most important thing in a market, and RTM added it. You know, you can solve all the contradictions in analytical RTM with the QM, and we never look at the QM in a simple way that we see in books and these sort of things. So let's to have some question answers here. Okay, guys, tell me how to find free order flow. Free order flow is against, it has some types, but most of them is related again to the QM. But it is a long story, and we don't have enough time in order to telling you about this. But in the future, I will have some videos about the FOF and decoding scale in FOF a little bit for you. Okay, next question. Oh, okay, Mr. Really, yeah, I'm asking to unmute you, but your
Perfect. Okay, let me just try and share my. Let me just try and share my screen one more time.
Yeah, it's really great. Here you are.
Right. I think most people don't know what free order flow is, so I'll just try and summarize it for you guys. Okay, can you see my screen?
Yeah, it's really great. Yeah.
Okay, perfect. So the first thing we need to know is that we need to make sure, okay, the market has many FTRs. What is an FTR? An FTR is we have a low, the low gets broken, the market retraces. This also is an FTR, right? That's an FTR, failure to return. But in order for us to know that this FTR had orders, okay, so these are the flag limits I look for, right? I make sure that there's a first touch to it. It can have multiple touches to it, but the other thing you need to take note of. Okay, let me just do this so that I can get it down for you guys. Okay, so we've got a low there. Okay, we've got a low there. It got broken, price deepest retrace to it. We've got an FTR. Perfect. So when this happens, it creates a low. This is the initial low that it creates. Price returns to it. It breaks again, right? Then we've got a lower low there. This zone, we know this zone has orders. Why? Because it could hold price a couple of times, right? Before it actually gets broken, right? So to me, this is what we call an FTR. FTR become a flag limit, right? So these are the type of flag limits I trade because these are the ones that have orders, right? So once we have our FTR become a flag limit, so we've got a low there, it gets broken, price deepest retraces to it, flag limit, so it creates a low, it creates a lower low, then price then engulfs that and continues that way. Okay, let me just change the color to red. Okay, maybe blue. We get that. This is what we call free order flow. So it's basically the flow of orders from sellers to buyers and from buyers to sellers. But take note of the following. One, you have to have an FTR, right? FTR, it means we have a low there. That low gets broken, price deepest retraces to it. But in order to verify that low, it has to be retested a couple of times. And to make sure that it has orders, this must be broken by the retest that it will make, right? So it has to touch for the first time, comes back, touches for the second time. When it comes and touches for the second time, the low it creates must be lower, right? So if price doesn't give me this scenario, we can say it's a free order, but the strength of the orders are very small, right? So remember what I said in the previous when I was looking at the Nasdaq, I say that price always has to hit its target, right? So this is what Mr. Pai actually wrote in some of his books, when price decides to come back, Mr. Pai, are you there?
Yeah, that lower low.
Am I now sharing too much?
No,
Am I now sharing too much? Okay.
The lower low that you draw right there, it should hit the target, and the other
It should,
thing,
exactly. Yes.
it must hit the target. And the other thing is that the FOF that you draw is true. And I by myself, I mostly trade the edge of that swap of flag limit. I draw a QM. The things that today I told the guys is it was about this issue. I find a FL and I trade the QM of the FL. And
Yes.
you got it. A new FL that you drawed here with the blue box. I trade the low of that new FL. You see in the blue box, it is a QM level.
Right.
This is a true
I see what
QM
you
level.
mean.
The lower low hits target.
I see what you mean.
And you find the last.
That's what I was about to say as well.
Yeah,
because you said, if you remember, you said when price comes back, or
comes
when
back to
price
the
makes a decision,
of course,
to break the previous, or when price makes a decision to return or to get inside the previous order flow, that place is called the DP. So for those who don't know, this is the DP. This is on.
I trade the DP.
Sure. Yeah. So we have to make sure that the deepest retrace price makes has hit its target, just like Mr. Pai said. So this is the target, the first target. Then now we have this scenario, right? We now zoom into this zone, right? So this is this zone. So I'm just magnifying what's happening inside that zone, right? Let's see. All right. Let's use the blue one just to avoid confusion. So it's just the previous zone, and this is the price. So this is the price going up like that. So this is the DP, because this is where price made a decision to enter into the previous flag limit, right? And one thing we need to take note of is that when price does this, it can, engulf there, then price comes back, it does that. So this right here, we can call it our ORFL. So that's where price made a decision to hit this target, right? After price hits this target, price is let me do this. Let me do this so that it all makes sense. All right. So we've got that. And maybe it gets like that. So that's our OR flag limit. That's the origin of the move. Price gives us a similar thing when it gets here. It hits its target, right? Once price hits its target there, we get that. So orders have been swapped, Then here we get once it's been engulfed, we get an RS there. Right. So this is gonna give a bounce, go up there, and when price comes back inside this flag limit now, when price comes back, so first we've got this OR flag limit. This is an OR flag limit coming to hit its target, which is a DP. After price has hit its target, a DP, we realize, there's an MPL there because it has swapped these orders. There's a flag limit there. This flag limit hits the target. After it hit the target, it got swapped. After it got swapped, price broke the original flag limit, creating a mouth. They call it a
Okay.
mouth of a flag limit, or RS. Then when price comes back, okay.
Yeah. It's okay, Mr. Willie. And let's have a little bit question answer because the time of the webinar it gets too long. Okay, well, what does OR mean, or ORFL? Mr. SS asks us. You know, origin of move is ORFL. You know, it's OR. OR is a place in which the, for example, imagine that a valley, imagine that a peak, imagine that a high, okay? We have a node, or we have an area in which the sellers could overcome the buyers. You know, that is the ORFL, that is the origin of move. And you know, the second time when price get back to it, we have an attitude right there, and this is the ORFL. Yeah, that's the answer. So let me see another questions we have. Can you explain a scale more detail? You know, explaining a scale, you need to, you need to know my attitude at first, and you need to know something. You know, a scale is the last step of the RTM. You know, you should learn all the things, and after that you learn FL and learn a scale. But you know, I shared some brief video in the channel, but in future I will share more videos about the scale and these sort of things for you. Well, could you kindly summarize and go over the true high and low, please, again? Well, let me share my screen. You know, guys, true high and low, and as I told you, and Mr. Willie told us, true high and low is a FL, is a flag limit that you see. You know, this FL hits holds the price up, and this high hits the target. What is the target? Target is the opposite flag limit. And you know, the swap of FL which got back to the QM level right here. So this is FL, which is holds the price up. When we say holds the price up, it should pass the previous high. It passed the previous high. And you know, this area consumes the order of the previous one, so it has a QM level. So I draw lots of them here for you. As you see, it is really obvious here. I will share a recorded webinar for you in channel. You can see, you can watch it again. Great trader, help trader. Okay, thanks. Thank you very much. All the markets sometimes work, sometimes they don't. So use money management product. Yeah, you know, Mr. Noobs, Mr. Noobs told us that all the schematics sometimes work and sometimes not work. Yeah, as I told you, the things that the things that I find in market is theory. They are not principle. The principle is always true, but the theory not always true. Maybe you can, you know, maybe you can face with different findings. So we need to have lots of practice, and the practice backtest makes you more expert, and you can get a real good trade with the high probabilities. You know, that's it. Is there any plans to start a free mentorship program, those that are unable to afford a free fee? I don't know. I can't say anything about this one. We should have a, you know, we should have a conversation with my friends and with my partners. Okay. There is no any questions. Okay, guys. I will share the recorded. Yeah, ignored FL. You know, ignored FL. Ignored FL is a flag limit which is couldn't get back to the DP. you know, yeah, we consider it, you know, ignored FL, we consider it like that, with the some levels, we consider ignored FL. Yeah, it's really important. Well, okay, guys, I hope it was a helpful webinar for you. Thank you for watching. It is more than 1 hour. Yeah, it is near 2 hours. Yeah, thank you for watching, guys. I hope you're fine. Have a good day. Take care and bye-bye.